Good morning, everyone, and welcome to the European crossover webinar. And we're starting out with a pretty slow start to the week. Everything's relatively quiet. We don't have a whole lot of data either. We're going to get into that quickly. Bear with me. So you can see here that it's relatively quiet now. We did get some German export data, but I mean, that and we do have UK GDP, industrial output. That's going to be key at the bottom of the hour. But and Eurozone Centix Index. But coming into the state, it's going to be relatively quiet. The only thing we have is employment trends. As we roll into the next day, we will get industrial output, unemployment rate out of UK. Obviously, the big move, and and obviously tomorrow in the U.S. we'll get JOLTS jobs openings. But the key thing obviously is going to be the ECB, what they're going to go on and be able to do, and whether the market will discount that. That'll be a key thing also. I do have German CPI data on the 12th as well as French CPI. Let's take a look here. CPI data also the same day out here in the States. That'll be on Thursday with jobless claims. German wholesale prices on Friday. Spanish HICP. Retail sales out of the US, be a little bit of a mover, along with the University of Michigan, which would be 10 a.m. Eastern. Now, that's on Friday. That'll be the day after the ECB. Obviously, the market's going to be keen on the ECB. It'll be interesting to see that. Let's go on and take a quick look. Now you can see here with the balloons, they're already starting to slide back again, meaning obviously rates are going up higher. And at this point now, it's kind of wondering how, the way where rates are right now, what impact will the stimulus have anyway when they go in? And that's the concern here, is that that may end up being discounted to a certain extent. Take a look at something else. It said, and one of the stories I saw just kick off just a a couple of minutes ago. Longer dated bond yields edge up as investors get ready for the ECB. Longer dated Eurozone government bond yields ticked higher on Monday ahead of a big policy meeting this week with the ECB, which is expected to cut rates and announce the stimulus measures to support the region's sluggish economy. Most long dated bond yields were up 3 to 4 basis points. Germany's 30-year government bond was up 4 basis points. Data showed Germany exports unexpectedly rose in July, suggesting the Eurozone's biggest economy may be withstanding some of the impact of the tariff disputes and Brexit uncertainty. Exports increased by 0.7 month on month, with economists in a Reuters poll had forecasted a 0.5% decline. German imports declined much more than expected. Still, the focus remains on the ECB and what kind of stimulus it announces on Thursday, with the European Central Bank on table. On the tableau, it says for this week, I don't expect any significant movements ahead of the meeting, said Renee Albrecht. That's the same thing that Blake said, but they're referencing the yield rate. So here, Eurozone government bond yields made up big gains last week as investors lowered their expectations of aggressive easing from the ECB after hawkish comments from the bank's officials that steepened the bond's yield curves. Risk-on sentiment, further supported by the perceived fall in the likelihood of a no-deal Brexit at the end of October, and news that the U.S. and China would resume trade talks, which curbed demand for safe haven assets. Federal Reserve Jerome Powell's speech in Switzerland on Friday afternoon also firmed up expectations for a 25 basis point rate cut by the Fed. So once again, like I said, as I mentioned, the story is we've seen some of the safe haven demand dwindle, obviously with the thought that Brexit appears to is going to be going delayed from the October 31st Halloween scary date. And then also U.S. and China talks, which are going to be starting again in October. So we've seen that safe haven asset demand dwindle, and then people start to factor in is, well, how much, and they have been thinking about that, how much further more stimulus can you get out of the euro, especially when you look as far as German bonds have gone. I mean, that's not the same, but when you look at that, I mean, you begin to start to discount the potential action for that, and we shall see. So potentially the euro could rally coming out of the ECB. And you can see here the euro's trading relatively quiet here, 1031. We're looking for potentially a little bit of a dip further below 110. If we can get it, I think that'd be a great opportunity. Peso, after a pretty good slide back, is finally starting to calm down here, and dollar index is just hanging around here. Once again, relatively quiet action. Aussie dollar still pinned up here near the highs. Okay, and if we take a quick look over here, bear with me. If we take a look on the cross rates, you can see here that the Aussie yen is doing just great, you know. Well, maybe not great, but pretty doggone good, you know, from where it's been. Remember how we've been in such a quiet area here, and things are now finally starting to firm up a bit. Remember, we were just dead in the water for. Remember, look at this. Remember these right in here, basically training about a 20 pip range. I mean, it was just absolutely dead. Now here we are pushing. We've come all the way up here to this uh, key level, which was our bias chart at the time, but we're struggling a little bit. We'll get to that shortly. Um, let's go on. Okay, let's go on and get on with it. Morning bid. The markets are playing the push-pull of the weak economic numbers and the offset in policy response again. Stocks are essentially reading poor activity numbers as good news and betting on the fresh monetary easing. And so, despite or maybe because of a weak U.S. August employment report on Friday, news on Sunday of an unexpected drop in Chinese exports last month, equities are focused instead on the latest stimulus from the People's Bank of China cut in reserve requirements last week. The expected easing package from the ECB this Thursday, and the Federal Reserve's likely quarter-point rate cut next week. That sustained the tilt back towards the riskier assets from last week, with Asia's main markets mostly higher on early Monday, and U.S. and the European futures in the black as well. Shanghai, Tokyo, and Seoul gained out about 10% each, half of 1% each, with Hong Kong underperforming once more and closing flat. Big political focus on sterling, which slipped back against the dollar and the euro first thing on Monday after last week's rally on Parliament's move to prevent a no-deal Brexit. Parliament is expected to vote again later on Monday on PM Boris Johnson's plan to hold a snap October election, but is likely to reject it once more as it awaits confirmation. Johnson will carry out its instruction to seek an extension to the October 31st Brexit deadline. If it fails to get a deadline with the European Union or deal with the European Union, Parliament is then effectively suspended for the next 5 weeks as negotiations play out before the October 18th EU summit. Johnson visits Prime Minister Leo Varadkar in Dublin on Monday. Press speculation and focus on whether any wiggle room in the Brussels or Dublin of the changes to the controversial Irish border backstop provision. Move on. And the euro on defensive ahead of the ECB. The euro was under pressure on Monday ahead of a ECB meeting later this week. And the policymakers are expected to deliver new stimulus to bolster a flagging regional economy. Heightened expectations for the ECB easing come as the other global central banks move to loosen the monetary spigot. including the People's Bank of China, which on Friday cut the amount of cash that the banks must hold on reserves. The yuan weakened. The dollar was confined to a narrow range versus the yen as traders weighed the prospect of U.S. interest rate cuts against the demand for safe haven assets. Chinese numbers played to view that if we don't see progress in the U.S.-China trade talks, then further easing will be necessary, including the tolerance of a weaker yuan, said Gloria Trill. The ECB is the big game in town globally this week, and the market is more comfortable with the Federal Reserve cutting rates. So I think the market is probably risk neutral. Sterling edged lower as political uncertainty about the UK could complete its divorce with the European Union by October 31st. Deadline dented appetite for the pound. Traders are likely to take cues from the ECB as major central banks line up support measures for a weakened global economy. The euro was little change at 10.29, and let's move on. And finally, pound slips ahead of the parliament vote as Johnson vows to fight the Brexit delay. Sterling slipped 3/10 versus the dollar and the euro on Monday before the British parliament votes on Monday whether to hold an early election on October 15th. A motion is likely to be defeated for a second time. PM Johnson last week failed to win enough support from lawmakers to call early elections for parliament and also approved a bill which aims to block a no-deal Brexit at the end of October. That would force Johnson to seek a delay to Britain's European Union departure. Sterling had a roller coaster week during which it plunged to three-year lows before rebounding strongly as lawmakers voted to block the no-deal Brexit. However, there are some uncertainty on whether the EU will allow an extension, while the Daily Telegraph reported Johnson has prepared plans to legally stop any Britain Brexit extension. So let's go and move on to the charts now. And we'll start off with the euro. So you can see we're just kind of holding on here with the euro now. Once again, we came off some key weekly lows off of here, this 926 area here. We had talked about it at the beginning of last week, and it's ended up held in here, and we had a nice rebound, but we couldn't quite get past this 1075. So since the euro has staged a recovery off key weekly lows, but found resistance at 1075, solid support comes in at 989, a daily close above 1113. We'll turn the pair to solidly bullish with the next stop, 1215. So when we look at this now, so if we were to slide back, we're looking for 989. And for right now, resistance is going to come in right there, 1060 for now. And let's go move on to the cable. Okay, so it says cable has staged a rally, closing above 2287, opening the door to challenge 2406. Initial support comes in at 22.16, followed by 21.59. A close below 21.18 breaks the upside momentum. So let's go and take a look at where we stand here. Kind of had a nice little bounce back. We were under some pressure earlier, and we certainly have seen a nice little bounce back. Yes, we actually came in right here to the support area, see that, 22.36. Yeah, very nice little support level we came into there. We're looking at this, and we do have a lot of quite the plethora of data out this morning. We're going to go in and move. And as Blake likes to say, UK politics is tricky, and actually the cable in of itself is tricky. We're actually going to go and move the bias chart resistance right here. It's going to be, although we could blow through this with the data, but it's going to be for right now 2307. And support comes in right there at that level. You can see that touch coming in here. So that is 2237. Go with that 2237. Yeah, let's go and move into the Aussie. Well, this Aussie looks nice and firm. And obviously being held, we mentioned that since last week. We said they were waiting for good Chinese U.S. news, and we certainly got it in the sense that if you're looking at the talks resuming in October, certainly it's making the most of it. And one of the things that when we got lower, as bad as the numbers were, the Aussie still wasn't breaking the new lows, and we're starting to see some continued further short coverage, and we're still seeing it further. So it says here, the Aussie secured a daily close above the resistance area of 68.31. You can clearly see that. The pair has the potential to get to 69.44. Initial support is 67.80 with resistance at 68.75. So we'll go with the 68.75 for our bias chart resistance. You can see that coming right there, 68.75. And we're going to have to show this, once we got above this, we're going to have to flip this to bullish now, give it the benefit of the doubt. And the same thing here with the euro. We're going to give it the benefit of the doubt here also. And let's go and take a look for the support. There we go, 68.75, which actually comes in, look at that, right at just before the 50%. And support, well, let's see, we've been nice and firm here. Support's going to come in right there. 68, 11. And 67.97, but we'll give it the benefit of the doubt right now. It's holding up very well, and any dips back towards the 68.34 are going to be bid up. So, yeah, we'll go with that, which is going to be 68.11. Let's go on to the Kiwi. So it says the Kiwi successfully cleared major weekly levels 63.89. You can see it right there, and allowing for a challenge of 64.93. The pair stalled just before resistance of 64.52. Initial support is 63.60. So we're going to go with the 64.52. And like I said, that's good resistance there at 52. I'll show you right there. You see right there? It's a little close right there. You see that? It stopped. It stopped just right before there. So it's going to be 64.52. We'll call it 64.53, even it up. And let's take a look here for the support. This is last week's data. Let's go and save that. There's a 63.60, but I would look for this to be better to right there, 63.70. But you can see here we generated this bond move right here on the momentum with the exponential moving average. And let's move into the dollar CAD. So the dollar CAD broke key support level of 32, um, allowing for a challenge of 30.43. Initial support is 31.36. The resistance is 32.36. The daily close above 32.52 will neutralize the downside momentum. So right here, if we can get above, go back in here, if we can get a daily close above 32.52, you can see right there, that would negate this downside momentum for those that are bullish. But certainly losing 32 even was, certainly has put the pressure on this. And we're indicating here that it allows for a move down here to 30.43. You can see here. Allows for the market to go and challenge this area. Right now, immediate support is going to come in here at 31.36 with resistance here at 32.36. So wide parameters, but we've set ourselves up in this situation. It's going to be 31.36. And on the upside, 32.36. Now we broke that, so we can't say that we're bullish. I don't know if we want to say that we're in a range, but we did break that 32 cents. It's turned it rather bearish now. So let's flip this now to bearish. But it has opened the door, as I said, for this to challenge this 3043. Yeah, because you can see here, even when we had this, might even consider this almost like a grayish tone doji right here, and we challenged. Remember we got all the trouble we were having here at 33.36, and then we finally get above it, and then we really opened the door and challenged 33.82. Remember that a week ago we came in, I was on face on that Monday, and I said, hey, this is a good area for them to go in and take some gains off. For those that are long, we may stop. Then we got the data out this morning, and then after that, it was just down, 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 down like a submarine horn. And we're certainly pressing further into this starting this week. Let's go into the dollar peso. So the dollar max has closed just below support level of 1956. The pair should find support at 1950, which is the 50% of this entire move. You can see that right here. But that's a good key support level, 1956. Obviously, they closed the week, any longs were just, bailing out. So pressure, but like I said, just below that. So we're kind of holding here at this 1956. But we're saying here that support is 1950 to 50%. With additional support at 1937. So we should see some real good buying here. But this is a good area here. This 1956 is a good level support here. And the market was under some pressure as it came into the close on Friday. So we're just holding here. So we'll go with this 1950. You can see here that 57, they closed just below this area here, kind of holding here, but we'll give it the 1950, which is the 50% of this entire move. They may not hit it today, but maybe they'll have the opportunity to hit there. Probably should see some decent little short covering coming at that point. Let's go on and move in and take a look at the resistance. And even support right there at 1953. See that? Okay, and resistance is going to be, we'll call it, it's a bit of a stretch here at 1971. Yeah, let's lower that down here to 1968. 1968. Okay, here's the UK data getting ready to come out. Here comes the data. Three-tenths. We'll push up a little bit higher here. We do have 2307 for our bias chart resistance. You can see that right here. Industrial production was a beat, but back months in the GDP was a wind down. So that 2307 looks like that may just keep this capped. Says 10-year gilt yield is up by 4 basis points right now. You can see this easing back. So like I said, that 2307 is holding very well. Sentex investor confidence came in at minus 11.1. They were looking for a minus 14.0 in the poll. Euro reacting just a little bit better. Okay, let's go on and move in now to the dollar yen. The dollar yen closed slightly above resistance level of 676. The pair appears to be simply marking time. Resistance comes in at 778. Initial support is 622 with a close above 592. Like I said, this is where the real resistance comes in, 778. We closed above the 676, but like I said, the market's trading very quietly. We're just simply marking time. So let's go and take a look on the 2-hour chart to see if we can get a little bit closer perspective as to where our bias chart resistance and support levels are going to be. You know, the thing that's a bit surprising here is, well, maybe not because the market's been just discounting that, is look at the S&Ps. The S&Ps are just right now at 29.85, and look, the dollar yen continues to just not even pay attention to that. Now, obviously, it's being impacted by U.S. yields, but even right now, I'm looking at the 10-year yield is higher, and we're still not seeing any impact here of any significance. We'll go here and move this. Is that it's going to be right there. The bias chart resistance will be there at 728. So let's take a look at this. This was higher at the time because of the employment report. Bias chart resistance now is going to be right there. We'll call it 730. And support will be right there. Let's go low there. Right there. 639. Let's go move into the cash dollar index. The dollar index retains its bullish bent as long as the key weekly level of 97.89 is maintained. The index would need to close below 97 even to generate an outright sell signal. Resistance is 98.69, followed by 99.07. So let's go move into the 2-hour chart. So what's shown here is going to be 98. So we said 98.69, but we're looking here on the 2-hour chart a bit closer. Uh, yeah, I want to stay with this. Just keep things in tow. 98.63. Yep, that's from Friday. And support. Let's go with this 98.14 over there. 98.14. 98.14. And let's go move into the cross rates. As I said, we're trading very, very quietly across the board. Let's move into the cross rates. So the Kiwi yen has staged a nice rally with 5 consecutive higher daily closes, stopping just before resistance at 68.87, confluencing with 68.95, which is 38% of this recent range. Initial support is 68.27, followed by 67.87. So we're going to go with this right. You can see right here we stopped just before that 68.87. That's actually keeping it in check, but we'll actually give it the 68.95, which is the 38%. So we're going to allow for this to go a little bit higher. Maybe we can push it a little bit higher today. 68.95. And support 68.20. Let's move into the euro yen. Says the euro yen has bounced off the lows, but struggled with the 1830 level. You can see that right there. Uh, the pair is just above the weekly level of 1770 because they're able to reclaim that. A daily close above 1830 sends the pair to challenge 1927. Critical support is 1706 to avoid a fall back to lows. So you can see here 1830 is just huge right here, at least for right now. So let's go with that 1830. And obviously the key support is going to be 1770. That's huge there. We'll see if we see anything else additional on the 2-hour. There was just a little bit more room there, and that would be 1765. 1765. Now let's go and move on to the euro odd. The euro odd has slid back to key support level of 69.05. Wow, we're even below that right now. Well, I mean, 16.95. 60.85 is the 78%. We're just below that right now. The pair should find solid buyers to step in at 60.40. Additional support is 50 pips lower. So here's 60.40 right here. If we can push back that, that's a heck of an area here. You think of it this way. Look, this is a huge level here. This 60.95, you see that right here? And a huge valuation level as far as volume also. And then 60.85 is 78%. We're just below that. So this 60.40, I think, would be quite the pickup right here. 60.43. He said 60.40. Call it 64. Let's call it 60.42. We have really come up quite a bit. We've really come off quite a bit here. And then additional support comes in about 50 pips lower. I think it's at that point be 59.89. And there's some between there, between 42 and 26. And resistance is going to be right at 61.15. There's actually some more at 61.37. So 61.37. And let's go with the Euro Q. The Euro Q is slid to major support level of 81.30. It resets it. It should be 71.31. 71.31. Additional support zone is 70.60, 70.82. The pair would need to secure a daily close above 73.85 to challenge the high. So you can see this, the importance of this 71.31. Let me get that, clear this up. Apologies there. So you can see the 71.31 coming back. You see that? Look at all the touches there. So, and we've actually held that. We actually tested the 71.31. We closed almost there on Friday. And look, we came back and tested, and now we see a little bit of a bounce back here. But you got this nice volume zone just below that. So if we want to go and press a little bit lower, split the difference, call it right there, 70.80. Let's go with 70.80. I'm going to press that a little bit further, although we are finding some support right now. And on the upside, it's going to be 72.51. And let's move into the Aussie. This part doesn't surprise me as well as the S&Ps are doing. And then with the whole China talks, we've mentioned that for the prior week, and they're making the most of that and continue to press higher right here. So you could continue to see the euro odd under continued pressure here. Let's take a look at this euro odd again. So we do have 60.40 that might press all the way down to that. On the 2 hour, remember we saw 60.26. So let's go into the Aussie, which is continuing to move higher. The Aussie is broken above a month-long range, allowing for a challenge of 74.02 with initial resistance of 73.32. Well, we've already gone past that initial resistance. Support is a breakout level of 72.56. So let's take a look here. We just had this big break and really 73.88. You see this pause here? Let's go and see if we can't get this a little bit further back. Trying to see how far where we would potentially go to, and it looks like that 73.88. I'm just trying to show it to you a little bit clearer. Yes, I could have just zoomed in on it, but let's take a look. This is getting a little bit frustrating. We're just about there. There we go. Sorry about that delay. Not really. No, it just doesn't even come up till 74 cents. The wheels came off the caboose here. There's just a bit, you see right there, 73.86. So we may be a little bit of positive 73.86. So let's go with 73.86. Right there. Of course, you can push over here to 74.08. Let's go with that. There'll be probably a positive 73.86. Let's go with that. And support, 72.87. And let's go move into the guppy. Tell you what, let's go here, 72.87. There we go. And move into the guppy now. The guppy has cleared 30.41 to generate upside momentum, but is stalling at resistance at 32.26. Two consecutive daily closes above 32.26 will confirm a double bottom is in place. You can see that right here. Will confirm a double bottom is in place, thus allowing a challenge of 34.16. Support comes in at 30.41, followed by 29.65. So this is where we're having the trouble, 32.26. That's going to be our bias chart resistance. And let's take a look for support. Got 32.42. Let's go back to this daily. You know, let's go with this resistance here because if they do pop those stops, this is where they'll have some trouble right here. Let's give it the benefit of the doubt. 32.43. Let's go with that. If we do pop those stops, we're certainly seeing the cable push further. Let's go with 32.43. And cable's pushing up higher. We're 23.16 right now. We're making new highs. On this move, that is. Support, we just came right into our, you see that right there, our support level. Still need to move that low if we come back down. If we do slide back, 30.59. And let's go on Sterling North. Sterling on has been turned away at the 80.89 level. Pair should pull back to 78.73. And actually, that's where we went to. You see that right now? We just went to 78.73. With additional support of 78.25. Well, we're going to go with the 78.73. That's what we're looking at as we started the week out with the analysis on Sunday. So 78.73. I'm going to give it the benefit of the doubt if they do squeeze the stops. And it's going to be right there, 79.87. Might be a stretch, but we'll give it the extra room. We've got the momentum going. 79.87. Okay, so there's the bias chart, and we're going to take a quick look on the main screen. You can see Euro is relatively quiet, as is the cash dollar index. The only thing that's moving a little bit here is cable. Peso's quiet. Dalien's quiet. So it's just a cable right now. We're just above bias chart resistance. Thanks for joining us here. If you want to join, pop in for the FX Daily Roundup. That's at 12:30 Eastern. Thank you once again for joining us here on the European Crossover.